The two big punches which are seen knocking out the perma-bulls. 1. Spiking inflation and fears of rampant recessions. 2. Collapse of SVB Financial. Nifty's immediate downside risk seen at 17,255 mark. In early action, SGX Nifty is indicating a gap down start for our stock markets. That brings us to our call of the day, which suggests investors are likely to refrain from betting aggressive positions. That's because there are two big punches, which is seen knocking out the perma-bulls. Nifty is taking a double whammy amidst 1. Jerome Powell's hawkish testimony. 2. Collapse of SVB Financial, a California-based tech lender. The seizure of SVB's assets marks the largest bank failure since Washington Mutual during the height of the 2008 financial crisis. Long story short, it's likely to be a sea of red at Dalal Street. The pessimism will be such that there is no scope, no place to run, no place to hide, and most likely it will appear as if the sky will simply fall. Global cues are negative. In Friday's trade, FII sold shares worth Rs 2,062 crores while DIIs bought worth Rs 1,350 crore. Fando options data suggests Nifty's range of 17,000 to 17,700 zone. India VIX is at 13.41 levels. Nifty PCR is at 1.24. Bank Nifty PCR is at 0.97. Nifty's outlook for the day, volatile and choppy. Market breadth for the day is likely to be negative. Sentiment is likely to be bearish. Nifty's technicals are suggesting a breakdown play. Nifty CMP 17,413. Nifty's intraday support at 17,255 mark. Biggest Nifty interweek hurdles now at 17,593 mark. Nifty's range for the day is seen between 17,250 to 17,500 zone. Bias for the day, negative. Bank Nifty, CMP 40,485. Bank Nifty's intraday support seen only at 39,413 levels. Major resistance at 41,679. Bank Nifty range for the day at 39,400 to 40,700 zone. Bias for the day, negative. Nifty and Bank Nifty tumbled in Friday's trade and ended on a negative note. The brutal sell-off on Dalal Street is seen getting worse as the negative takeaway from last week's Nifty's dramatic sell-off brought the benchmark down below its 200 DMA at 17,434 mark. This morning, the cues are extremely negative after the Wall Street 2 sunk in Friday's trade, posting their worst week since 2 June 22. On a weekly basis, the Dow Jones fell 4.44%. The S&P dropped 4.55%, while the Nasdaq lost 4.71%. Strictly speaking, the turmoil among banking stocks overshadowed a February jobs report, which gave some hints that inflation could be slowing. The US non-farm payrolls data for the month of February came in at 3,11,000, above expectations as surpassed forecasts of a 2,05,000 gain.